Hi, this is Kerry R. Tech with Wicked Stocks bringing you your daily Tesla report for Tuesday, April 9th, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts. I'm going to start with the big picture as always, work my way into the day itself. This is just to remind you of the long-term outlook. This July high, since the July high, we've been operating in the confines, trading within the confines of a descending channel structure, the top of which at 239.21 was tested the week of Christmas, late December. And following that test, we'd told you that you should allow for full bearish rotation back to channel support within 3 to 5 months. That became clearly indicated when we violated on the way down both channel and speed line support, if you recall. And so for the last 2 or 3 months now, we've been plodding along this channel structure. It's been holding selling pressures, with the exception of 1 week about a month ago when we closed below the 159.91 channel bottom on the weekly chart, and that was by a full 1% margin, by just a hair. It was outside that 1% zone, setting off a sell signal that we were expecting to yield 101.81 within 2 to 3 months. But if you recall what happened the following Monday, we gapped right back above this structure, and it has been holding ever since. And so it's been performing well. I would have preferred that we did not close below the channel bottom with the massive head fake that brought about. But here you are, 159.91 to 161.12. 161.12 is the same formation on the daily chart. Also been performing well and containing selling pressures. This area, once again, can contain selling not only through April, but even through the second quarter, because from here, as we are anticipating the possibility of a channel support within 2 to 3 months of testing channel resistance, we're now working just the opposite, that you should allow for bullish rotation over the next 2 to 3 to 5 months to the what is now at 239.21 and dropping. Now, that would be buying on weakness, of course, and I understand the whole idea of buying only on strength certainly heightens the probability for bullish continuation, and that would come at this juncture with a settlement on a weekly basis above these convergent channel structures now in the 184.25 to 188.84 region. The 188.84 channel top is on the daily chart at 190.78. You can see them up here in the upper right. And so that is what I would consider to be our near to midterm structure. Buying 161.12 and anticipating the lower 190s over the following 2 to 3 weeks. I'm going to start saying 2 to 3 weeks now, because these areas are narrowing gradually. You know, a month ago I was talking 3 to 5 weeks, and now because they're so closer to each other than they were before, it really is more of a 2 to 3 week dynamic. So buying the 159.91 to 161.12 region, holding it, talking to 2 to 3 week swing traders for the mid to upper 180s over the next 2 to 3 weeks, and vice versa. If we push into the mid to upper 180s over the next 2 to 3 weeks, then you can sell that area, not only taking profits on a long position, but playing the short side. That could mean, for instance, reaching for 160 or 155 strike out of the money puts that don't expire for at least a couple of months, because I think that is more like a 2 to 3 month bearish rotation. We could fill this particular wedge out for the next month or two, perhaps before the market tips its hand, the likely outcome would be a settlement above 188.84, given the significance of 159.91 as a long-term support area, which we've been testing and have now coming off of again. Now, in terms of the day itself, we do have 175.49. This descending channel top is in close alignment with meaningful Fibonacci. I think it's the 5/8, or could it be the 50%? I forget. In either way, I think it's the 5/8. 175.49 is your day resistance. I'm keeping it as a session containment level only because we've just fresh off of long-term support last Friday. And so, we can, as I say, and should, as I say, push into the mid-180s, low 190s over the next 2 to 3 weeks. And if we close today above 175.49, make that within 3 to 5 days or less. So 175.49 is really your 3 to 5 day swing trade. I'm not crazy about playing the short side from there back into the low 160s within 3 to 5 days. But if you're an experienced, trader, a 3 to 5 day swing trader, I don't have a problem with that. Selling 175.49, you don't want to see us close above it. But as long as we continue closing below 175.49 after having tested it, odds do favor bearish rotation back to 161.12. It's just that I think following the testing last week, once again, of long-term support, a settlement today, for instance, above 175.49 is certainly possible. And if so today, once again, within the week, 184.25, and by the end of next week, 190.78. Within 3 to 5 days, this area should be pushed into. It is narrowing gradually. Over the next week and a half, it narrows entirely into one single point. It is a range of resistance where profits can be taken. 2 to 3 week swing traders, if you bought 161.12, 3 to 5 day swing traders, if we close above 175.49 today. The 184.25 to 190.78 region narrowing gradually, able to absorb buying on a weekly basis, and even through the rest of April, we can fall back into the low 160s. And once again, if you haven't bought the low 160s during the recent testing of it, recent and also the last few months, really, that channel structure, and you're wanting to go long Tesla, maybe you have your own reasons for doing so, it really would be a settlement above these convergent channel structures. Once again, on the daily chart, 188.84 is 190.78. If we can close above this zone over the next couple of weeks, then we've got a clear 2 to 3 month buy signal. I would expect a protracted rally to the 239.21 channel top, where we could actually top out once again on a quarterly basis. So closing above 188.40 is definitely a solid go with to the upside. Don't be short Tesla. Don't be long those out-of-the-money puts. If we close above 188.84, actually you want to reverse and reach for 235 out-of-the-money calls that don't expire. This is a 2 to 3 month move. I would go with an expiration at the 6 month mark or later. Once again, I'm going to go back to the day itself. Just to remind you, where is the chart? I don't see it. There it is. 175.49 is our pivot point through the rest of the week. We can top out there for the day and potentially through the rest of the week back into the low 160s. But closing above 175.49 is the likelier outcome over the next day or two, just given the fact that we just came off that long-term support area. And if we close today above 175.49, 184.25 likely within several days. The 190.78 formation backs it up as a meaningful midterm resistance, able to contain monthly buying pressures, and if settled above, should set off follow-through buying through May and into June, then anticipating once again the long-term resistance at 239.21 within 2 to 3 months. Now, I'm going to talk one last mention of a sell signal that would occur on Friday if we close below the 159.91 formation. You might throw in the 1% margin there as well. I'm going to stress that less, the 158.31 1% margin, because if we close below 159.91 on Friday, we also close below the double bottom that is existing now. Last Friday, we retested this low to the very tick and came off of it. So if we close below 159.91, don't be long Tesla as we move through the rest of the second quarter. You want to play the short side. That could be reaching for 102 strike out of the money puts, for instance, that don't expire for at least 6 months. That is just one idea, but playing the short side as we move through the rest of the second quarter following a settlement below 160.51, 159.91 on Friday would be the recommended course. I think that pretty much rounds it out. I'm going to leave it at that for Tuesday's daily Tesla report. I'll be back tomorrow with Wednesdays. Please click like, share, subscribe. Check out wickedstocks.com. I'll be back tomorrow with Wednesdays. You have a great day.